All right, let's talk about growth investing. It's kind of the holy grail for pretty much any portfolio, right? But where do you even begin? It can feel super overwhelming. So today, we're going to break it down by looking at three totally different ways to invest in growth, each with its own unique flavor. But before we dive into all the specifics, I've got a really important question for you. What kind of investor are you, really? Because finding the right strategy isn't about chasing the quote-unquote best fund. It's about finding a fund that actually clicks with your personality, with your vision of the future. Okay, first things first, let's get a quick definition out of the way so we're all speaking the same language. So what is a growth ETF? You can think of it like a basket full of companies that are expected to grow their sales or their earnings way, way faster than the average company out there. The goal here is simple. You want your investment to grow. And to make this whole thing really stick, we're going to use an analogy. And I think it's a pretty good one. Choosing a growth ETF, it's a lot like building a music collection. Are you looking for the all-time greatest hits, a playlist dedicated to one hot new genre? Or are you maybe on the hunt for the next big thing? That's the question we're going to explore. All right, let's jump right in with our first contender. This is the greatest hits album of the investing world. We're talking about the iShares Top 20 US Stocks ETF, ticker symbol TOPT. Its whole vibe? Owning the absolute superstars. Just look at the names on this slide. The strategy here is, well, it's about as simple as it gets. TOPT is a passive fund. That means there's no fancy manager in a corner office making big bets. Nope. It just buys and holds the 20 biggest companies in the US by market cap. That's it. So you're getting all these household names, the mega cap giants that basically run the market today. But of course, with any investment, there's always one big question. What's the price of admission? What's the cost? It's about 0.20%. Now, in the world of ETFs, that's pretty low. And why is it so cheap? Well, it's all because of that super simple, passive strategy we just talked about. There's no highly paid team of analysts picking stocks. The fund just follows one simple rule: own the top 20. It's lean, it's efficient, it's a no-frills powerhouse. So who's this for? Who should be listening to this greatest hits album? Well, it's really for the investor who just wants a simple, low-cost foundation for their portfolio. You get the biggest players in the game, you get those quarterly dividends, and you don't have to pay a ton for the privilege. This is your classic set-it-and-forget-it way to own the market leaders. Okay, now let's completely switch gears. If TOPT is that classic greatest hits album, then our next one, the Roundhill Generative AI and Technology ETF, or CHAT, well, this is like a super specialized playlist. It's dedicated to one very, very hot genre right now: artificial intelligence. Yeah, this is a whole different ballgame. Chat is an actively managed fund. That means there's a real team of experts handpicking companies they think are on the cutting edge of the generative AI revolution. So you'll see some familiar names on here, like NVIDIA and Microsoft, sure, but you also get more focused players like Palantir. This is not a broad market bet. It's a super concentrated bet on one single powerful theme. And as you've probably already guessed, having experts curate this special playlist for you, well, that comes with a different price tag. So what does it cost to get in on this AI action? You're looking at an expense ratio of about 0.75%. Now, that's a pretty big jump from TOPT, right? And what you're paying for here is that active management. You're paying for the research, the expertise, and frankly, the conviction it takes to make such a focused bet on a very specific tech trend. So yeah, chat is for a totally different kind of investor. This is for the person who looks at the world and says, you know what? I believe generative AI is the future, period. And I want my portfolio to reflect that one specific belief. You're willing to accept the higher fees, and you're not really in it for the dividends because you want that laser-focused exposure. And that brings us to our third and final style, the Talent Scout. Meet the ARK Innovation ETF, ticker ARKK. Now, this fund isn't just focused on one hot genre. Oh no. It's like a scout scouring all the clubs across many fields, looking for those experimental artists who could become the massive superstars of tomorrow. ARK's entire strategy revolves around one phrase: disruptive innovation. And this slide really shows you just how broad their search is. They're looking for absolute game changers in robotics, in biotech, fintech, you name it. The portfolio is this wild mix of company sizes. You've got giants like Tesla, but also more focused innovators like Roku and Coinbase. Make no mistake, this is a high-conviction bet on the future, and it is definitely not for the faint of heart. And I think you know what's coming next. Having a team of talent scouts constantly searching for the next big thing, well, that's about as far from a passive strategy as you can get. So let's look at the cost. And there it is, an expense ratio of around 0.75%, pretty much the same as chat. And again, this fee reflects that super active, research-heavy approach. You're essentially paying the managers at ARK Invest for their vision, for their ability to try and spot these potentially world-changing trends before anyone else. So who is the ARK investor? This is for the long-term investor who truly believes that the biggest growth comes from betting on broad, game-changing innovation. It absolutely comes with higher risks and higher costs, but the potential payoff they're chasing is massive to capture those transformative trends that can literally redefine entire industries. Okay, phew. We've looked at the greatest hits album, the hot genre playlist, and the Talent Scouts mixtape. Now for the fun part. Let's put them all side by side so you can figure out which one belongs in your collection. This table really lays it all out, doesn't it? It clarifies all the trade-offs. On one hand, you have TOPT. It's passive, it's low cost, it's focused on today's giants, and hey, it pays a dividend. Then you've got Chat and ARK. They're both active, they're both focused on very specific themes for the future. You're going to pay more for that active management, and you're probably not getting any dividends because these companies are pouring every penny back into growth. When you really get down to it, it boils down to two completely different philosophies, two different ways of looking at the world. On one side, you've got the greatest hits album. That's TOPT. It's about owning the established winners, the ones everyone already knows. And on the other side, you have the specialized playlists. That's Chat and ARKK. These are calculated bets on where the music is going next. And you know what? That brings us right back to where we started. There is no single best fund here. It just doesn't exist. The right fund for you is the one that aligns with your story, with your own financial goals, and maybe most importantly, with your own deep down belief about what the future is going to look like. So I'll leave you with this to chew on. When it comes to building your collection for growth, are you a collector of the timeless classics? Are you a trend spotter, always looking for the next hot thing? Or are you a talent scout, trying to find that undiscovered genius before they blow up? The answer to that question will tell you an awful lot about where you should start.